Hey everyone, my name is Nick Emmons. I'm the CEO of Upshot. We're building a decentralized question and answer protocol on Ethereum that has a bunch of applications in decentralized insurance, particularly around decentralized claims processing. I come from the traditional insurance space. I was leading blockchain development at John Hancock and Manulife prior to this, doing a bunch of work around decentralized insurance. So this should be a pretty good panel. We're going to be just going through what insurance looks like in a kind of decentralized landscape, the different considerations, the different possibilities, et cetera. So I'll hand it off to the panelists and let them introduce themselves.
Hi, I'm Hugh Karp. I'm the founder of Nexus Mutual. We're building a decentralized alternative to insurance, and our big goal is to become a crypto version of Lloyd's of London.
Yeah, my name's Leighton. I'm one of the core team members at Pool Together, and we're building a decentralized protocol for price savings on Ethereum.
Hi, this is Ping Chen from Hakka Finance, and we are quite new. We have built an insurance project called 3F Mutual.
So I'd be curious to dive into the specifics with you, Leighton. How is Pool Together using or planning to use insurance in its protocol?
Yeah, well, it's a good question. So I think as we're thinking about it, right, like one of the first big forks in the road is like, do we think of insurance as a universal protocol attribute that sort of the protocol is providing in some mechanism, or do we think of it as something the user brings to the protocol? And as far it's been the latter. It's been something the user brings to the protocol. So people are insured through Nexus Mutual for deposits into Pool Together, but not all deposits into Pool Together are insured. So that's like the current paradigm. I think that I mean I don't know how it will play out, but I do think we want to ideally move towards a more universal insurance where the protocol itself through whether it's a protocol reserve, whether it's some sort of like governance token mining type of thing, is actually ensuring the whole protocol for all the people who use it so that users don't have to be super savvy about going and getting their own insurance. I think that is the ideal. It just is, I think we're just I think we're getting close to being able to do that, but right now we haven't done that yet. And it does sort of go towards this question of, what are the responsibilities of the protocol versus the user of the protocol, and right now we're still mostly in a paradigm, I would say, where the expectation is insurance falls on the user, but I'm not sure if that will work for like the mainstream, right? Like, I'm not sure if like, if someone, if a bunch of people put a bunch of money into Compound and then something happens, that they'll be okay with the idea that they were supposed to go to Nexus and buy insurance. Like, I think that works for the savvy people. So anyways, I guess that's a kind of long-winded answer, but we think of it right now from a user-centric paradigm of like they bring the insurance, but we would like to move towards a protocol-centric paradigm of like the protocol provides the insurance in some way that's in some programmatic way that's integrated into the protocol itself.
Do you have specific plans for doing that? Oh, sorry, go ahead.
No, I was just going to say more generally, I kind of really like the model where the protocol provides some base level of coverage itself somehow. Like it pulls together for its own users. And then perhaps then something like Nexus or whatever then comes in for more extreme events if it can't handle it or whatever. I think that model kind of works quite well because it kind of also aligns interests between a bunch of people. I also agree with you that it's kind of funny. We're kind of pushing this whole everyone takes their own responsibility for everything, which would mean all the individuals should purchase the cover themselves. But it doesn't quite work for the regular people because they're just used to having natively built-in FDIC insurance or whatever it is, right? So exactly. It's a different paradigm that we're moving to.
Yeah, it's kind of an interesting, it's an interesting way of bootstrapping these early kind of general insurance pools as well by offsetting some of the costs of the specific protocols and allowing them to kind of pool the amount of capital they see fit for their own like protocol specific risks. I'd be curious to hear what you guys think about exciting insurance products that are enabled, or markets that are kind of opened up outside of the DeFi space, outside of the crypto space altogether. Decentralized finance does a bunch in sort of like disintermediating the firm from the policy holders, and that comes with a bunch of efficiencies. Are there any other types of markets you guys are excited about?
Yeah, I've got a whole list. I can go through if you want. But
generally,
I mean, generally they are people that can't access or struggle to get access to insurance in whatever way, shape, or form. And so whether that's like emerging economy stuff, or for things like one example that I've been talking about in the real world is like marijuana growers in Canada. It's kind of legal, but no insurance company wants to back them because there's like potential, reputation type risk there that they don't want to take on. And so like community-based solutions are a really good solution for that type of thing. And, and DeFi insurance is really going to be community-based and that type of thing. So yeah, there's a whole bunch of those types of things in the real world that I like. Obviously perhaps not for right now, but as we grow and all the rest of it, I think that's where we can really help out. It's that kind of giving access where people struggle to get it right now.
With that specifically, and anyone else can answer this as well, I have a specific question. Do you see as these insurance pools grow, the same sort of like consolidated reputational risk taking an effect there as well? Like I'm in a Nexus pool, I'm in the mutual, and we kind of agree that marijuana insurance is not good for our reputation as a mutual. Do you see that kind of taking form in these decentralized communities as they do in kind of centralized firms? In any way?
Potentially, but the whole point is trying to give access to as many people as possible. So hopefully that's less of an issue. I mean, maybe it happens in 10 years' time. I don't know. Hard to tell.
Yeah. Ping, are there any insurance products outside of DeFi you guys have thought about or are excited about?
We're currently only building for DeFi native product. So I'm not sure if there's any workable approach to like make a reliable data feed from off-chain. But I think in the long run, it will be the maybe institution to get into the market, because like being an insurer requires some kind of expertise. Like you need to know how to underwrite and how to deal with the dispute of claim, and that's not what layman can deal with.
Do you see more like traditional institutional insurance companies getting involved in the space, building up like claims departments specifically for smart contract hacks and risks related to DeFi? Have you guys like talked to any of them and tried to get them in?
Not now.
I've talked to a lot.
Yeah.
Lloyd's, Bermuda, Malta, a whole bunch of other places. So the current view is right now, like they're looking at it, they're interested, they're on the edges, but it's still kind of too small and niche for them to kind of start deploying real capital into it. I think actually they're more going to be interested in entering via a partnership with an existing player, whether that's Nexus or someone else, just because they can take like the second layer of risk rather than the first layer, and so they're a bit further removed in it, and that makes a bit more sense to them to learn, because they just don't have the expertise right now, and it takes a lot of effort to get niche expertise up when the market may not be quite big enough for them. So I'm sure they'll come in 5 years, maybe a bit sooner, but they probably want to dip their toes in the water via someone else first, I believe.
Is getting them in a priority to any of you at all, and just like bringing some of that immense amount of capital that they have kind of locked up in the old world into this new space, because that brings a bunch of benefits, obviously.
Yeah, I mean, from my perspective, it kind of comes with a big benefit and potentially big disadvantages as well. But it's challenging. I think the one thing that is beneficial is the kind of it's capital that's outside the ecosystem that's covering the ecosystem. So it's actually probably more resilient from like really kind of catastrophic events that hit everything. So there could be something that hits Nexus as well as hits Compound and stuff, and then we've got a real problem, like no one gets covered, right? And so it's good to have entirely independent capital. The challenge is that they don't want to put stacks of money on chain to be able to provide reinsurance in there. They want to sit it off in a bank account somewhere deployed against multiple different business lines. And so you actually have to convince them to put money on chain, and that's going to take a long time. So, you know, there are technical challenges and things that they'll want to, they have to get across.
Yeah, do you guys ever worry about the sort of like turtles all the way down paradigm that's introduced by insuring our smart contracts with other smart contracts? How do you kind of prevent against that? Does just extra care go into the audits and whatnot?
Yeah, it's kind of my response on this one is like you're still in a much better risk position if you get some cover, because both protocols, both like the insurance protocol and the thing you're insuring, have to fail at the same time for you to be really at a loss. Because if just the insurance protocol fails, you lose your premium, which isn't great, but it's a relatively small amount. And then if the protocol fails by itself, you get your claim, but it's only if they both fail at the same time. So that's a relatively low risk, and kind of you're still improving your risk margins by like, you know, an order of 50 to 100 times. So, you know, that's a pretty good thing. But obviously, it would be better if there was from that perspective, if there was a regular insurance player that provided coverage, but they don't exist right now. So you kind of, this is the option we have.
Yeah. I think the video froze at the, oh, sorry, go ahead.
I think the issue can be solved by competition. Like if there's multiple insurance providers, they need to accumulate their reputation. So they would tend to act more honestly.
Yeah, that makes sense. I think the video froze at the beginning, so I'm going to ask the first question again. Why do you think DeFi users need to buy insurance?
Well, I think from my perspective, from building a protocol that is more targeted towards normal people to use, I think DeFi insurance is just a super important piece of crossing the chasm and of reaching the people that ultimately we all want to reach, right? Like no one got into Ethereum to like build a new financial system for like the super techie wealthy people. Like we got into Ethereum to build a new financial system for the people who are currently excluded. And in order to do that, like we need to solve a lot of problems, but one of them is certainly like the risk, because, you know, if you only have $1,000, you can't put it into a super risky protocol, because if you lose it all, you lose all your life savings. So, yeah, so I think insurance is like a fundamental thing that we have to have in order to really reach the true intent of what DeFi on Ethereum is, which is a more equitable financial system.
Yeah, I guess the other thing I'd add, like I kind of see it as it's a tick the box stuff for a bunch of bigger institutions like getting involved. I think that's necessary. And the other aspect is it's funny. This even applies to like deep crypto people. When something goes wrong, everyone wants someone to blame. Regardless of how everyone is pushing on this, like, you know, self-responsibility type thing. Like it doesn't matter what you're doing. Crypto people will get up in arms if they think they've been wronged as well. And so basically everyone wants that buffer, that safety net. And, you know, if they see something that's gone wrong that's outside of their control and they didn't really have responsibility for it or whatever, then they'll want that safety net. And that's kind of human nature, really.
I believe not all users need to buy insurance. For example, most people do not purchase insurance for their fund deposit in traditional bank. So it's the service provider's duty to buy insurance for their user, unless individuals are seeking to invest in an asset and want to hedge against risk.
Sorry, but don't like a whole bunch of people have insurance on their bank accounts? Like effectively via the government. like they're effectively forced to pay it by paying getting lower interest rates on their savings because the bank buys the cover, the FDIC insurance in the US or the equivalent systems elsewhere. So it's not as if they buy it themselves, but it's actually there in the underlying financial system.
Do you guys see somewhat related to that, I guess, more projects? There goes my video. Do you guys see more projects coming up with like launching without audits or kind of poor security practices because they know they can just rely on insurance, almost using it as a means to push those large upfront costs of audits onto their users via these small premiums that are kind of amortized across the user base? And do you see that as an existential risk for these systems?
What these guys think. I mean, my take is that the projects that are launching in that way are also not insuring either. They're just very irresponsible in every aspect. But I don't know. Are you guys seeing that happen? That it's definitely an interesting. It's an interesting like kind of risk asymmetry, or I don't know if that's the right word, but like if you have insurance and maybe you don't need to work so hard on securing it.
Yeah, I mean, there's a whole bunch of protocols launching without audits now, and they've had to get them later, which is not. I don't know. I can see some kind of benefits, like if you cap things and all the rest of it, but still, like I don't think they're trying to arbitrage the insurance. To me, as their main thing, I think one of the things that I have seen a bit more of is they launch something, get a lot of funds in there, and then they kind of effectively kind of blackmail the security audit firms into doing something like free, like, hold on, you don't want the space to explode or whatever. So all of a sudden we've moved up the priority list when it takes 3 or 6 months to get an audit these days or whatever. So I think it's perhaps a bit different, but yeah, the practice is happening a bit more.
Interesting.
I think buying the audit service is quite identical as buying insurance, and but since mostly the most recent projects are quite innovative, and I believe at least maybe 99% of them will die very soon. So I think it's acceptable that they don't get insurance or they don't get audit because they will disappear eventually.
How do you guys think about expanding into other product types, like from a speed perspective, from a coordinating your kind of user base perspective? How do you think about the timeline of expanding into the other product types we've talked about?
You mean in terms of insurance or general DeFi?
Yeah, insurance, like other types of insurance outside of what you guys are currently offering. How do you coordinate moves like that, and at what speed do you have plans to kind of move into other types of insurance?
Generally speaking, I think option can be seen as a kind of insurance, and it's like the fungible version of insurance. So in this scenario, options are the type of insurance that hedge, we can say maybe all kind of risk. So I believe insurance is not only about risk and covers, but it's also a way to realize the risk you're taking by being aware of its cost. So the cost of either option or insurance is determined by the market mechanism, but it's also a good way to signal the risk of the, let's say, specific product.
I guess from our side, we're building a generalized protocol that you can hopefully add on any kind of risk really quite simply. We're not kind of rolling out massive ones right now, just because we just focus on one thing to start with and make sure the mechanics are all working smoothly. But things like we proposed some specific tailored cover to make it our recently. And we're going to be looking at other things, like potentially things like slashing risk and staking networks, or specific Oracle cover, or and those types of things, or more comprehensive cover within the DeFi space as well. So quite a lot of plans, but we're going, maybe 6 months, something like that. maybe a bit less. We'll see how we go.
Cool. Yeah, so we have only a couple of minutes left. If there's anything you guys want to talk about around insurance, feel free to take the floor. Just anything we didn't cover that you feel should be mentioned about decentralized insurance. Anything?
I could talk for ages on a whole bunch of stuff, but I think I think it's obviously fledgling right now, relative to the lending protocols and stuff, and it's also a bit, to me it's also a bit more complicated to get right. There's a few more elements to it that have to kind of work in balance. So I think we're I think we're definitely on the right track, but there's going to be some significant innovations in the space coming, and that's going to be really interesting to see how it evolves from here.
In my perspective, I think professional agencies is quite important in the long way run of DeFi insurance, because that will allow retail investor to kind of purchase share from the insurance company, and let the operation be held by those experts.
Yeah, I don't think I have much to add other than it definitely seems like it's an exciting space. And I think there's still obviously a lot of opportunities to figure out how to make this work well for users. And I'm really excited because I do think solving this problem is going to unlock a lot of growth for all of DeFi.
Cool. I think that's the perfect place to wrap things up. This has been great. Thanks for doing the panel, guys. I think we covered a lot. I think insurance is really exciting, and what we see decentralized insurance do and grow to over the next 5 years is going to be a really exciting thing. So yeah, thanks.
Thank you.
Thank you, Nick.